So for the longest time, the market's been in a buy the dip mode, and things have obviously changed this year. I'm making this video on a Friday. The market's closing on the lows. It's looking pretty ugly out there. And we really got to learn, you really need to kind of understand how to sell the rip and what that means and how you can do it with options if you're going to trade, if we do go into a bear market or whatever, or even just a large range bound market. So in this week's episode of Liquid Options, I'm going to talk about buying the dip, selling the rip. We're going to talk about a couple techniques, some indicators you can use on multiple time frames to help you sort of pinpoint levels that you can trade options against. Now, we're going to get a little bit technical in this video using technical analysis. Like I said, multiple time frames, a couple indicators. I'm even going to walk through a trade that it actually is going to expire worthless today. This is a trade we took a few days ago using the exact techniques here. This was sent out to Patreon members on Tuesday, and this spread's going to expire worthless today. If you haven't done so already, be sure to subscribe to the channel. And if you're interested in learning more about Patreon and becoming a patron of the Vertical Spread Options Trading channel, you can click this little button here that's on the homepage of the YouTube channel. And real quick, you should know that everything you see here in this video and on this channel for informational purposes only, that I am not a financial advisor of any kind. So we got a lot to cover. Let's go ahead and get started. We got all that coming right up, okay? All right, so I want to start off with the weekly chart of the SPY and talk a little bit just about buying the dip kind of in general and what that means. A lot of you guys know what that means. If you don't, in general, what buy the dip means is when you're in a bull market, which we've been in for 9 years or whatever it is, when the market dips or pulls back, those are the times to buy the dip. Now, as an options trader, depending on what you're doing, you can buy calls. You guys know that I tend to sell credit spreads a lot more. So for me, buying the dip is really selling put spreads, because puts in by nature are a bear strategy if you buy puts. So if you sell a put or a put spread, it is a bullish strategy. It can also be a neutral strategy, and we can talk about that later. But in general, selling put spreads is how you buy the dip, if you will, when it comes to selling options as opposed to buying options. So again, from buying the dip, and we can kind of just, like I said, I'm on the weekly chart. We'll go back here. These dips that come through, and I've done a lot of research. A lot of my videos from last year were a lot of bull market strategies with call spread, SPX bull call spreads, RSI, buy the dip. But this was all in the context of a bull market, meaning we're trading above the 200-day moving average. You can see we continued to buy the dip. And yeah, you get some kind of range-bound trading here. This can actually be a decent time to sell the rip as well. But I've been there. I've been selling, in the past few years, selling the bear call spreads. And it's been very, very difficult, especially this last run up here. You try to stay, somewhat delta neutral, or where maybe this pulls back here, and maybe you sell an iron condor, and the put side always makes money, and the call side has been super difficult. You either have to roll it up and out and sell more premium to make up for it. And eventually you get to the point where you're like, you know what, I'm just going to not sell the call side, and I'm just going to, buy the dip, if you will, selling put spreads. And then eventually you have no hedge up there, and you get, one of these moves, and then you have to, it's difficult to trade out of that, especially if you're with the volatility so low during these times. So, in general, buying the dip means getting long, and there's various ways to do that. There's other spreads you can do, but in general, I'm just going to talk about bull put spreads for that. And then the next thing you can do or talk about is selling the rip, which is essentially the opposite, selling a bear call spread. And a rip essentially is a rally inside of a downtrend. Now, right now, the overall market, I wouldn't say is in a downtrend. This is the weekly chart. If anything, we're in just a giant range from about, we got up to 290. So that's about 2,900. Let's switch over to the SPX. It's about 2,900 down to we'll call it 2,600. So the first kind of technical analysis tool that I want to put on the weekly chart, just to give us an idea of what kind of market we're in, is basically a modified Bollinger Band. I may actually have this study here. And this is a modified Bollinger Band, which is essentially a slightly narrower Bollinger Band. It uses a 10 period instead of a 20 period. In the description of this video on YouTube, I'm going to put the parameters here. If you're in the ThinkorSwim platform, you can bring up the FW MOBO Basic, and you can actually see the parameters here. That uses a 10 period Bollinger Band with a minus 0.8 standard deviation for the band. The top band is 0.8 standard deviations and the bottom is -8 standard deviations. And I have the 10 period moving average on here. If you use the indicator inside of ThinkorSwim, it does not use, and you don't need it, does not use the middle band. It's strictly looking at the sort of a breakout of the upper band or the lower band. So when there's a break, when we're trading above the upper band, there is that would imply a bullish market or short-term market, and you're going to get these little arrows here. So if you just bring in the Bollinger Bands with those settings, you're not going to get those arrows, but you will understand that if you close above it, then you should consider that to be in a bullish mode. And you can see obviously right now we're in a bearish mode. But this is something that I'm going to be looking at more as a, potential momentum shift, if you will, even if it's temporary. So if we go back again, we're going back 10 years, and this was March 09. So you get sort of I don't want to call it a buy signal because it doesn't mean you're going to go long at this point. It just tells you that when the market is in this bullish mode and there's sort of this expansion. Now you can see as the market pulls back inside the bands, it actually won't turn red until it closes below. Now here you had a close below, and that's sort of the warning sign like, hey, something's going on here. Maybe we should sell the rip. And in this particular case, the market rallied the very next week and closed back above. So that was kind of a false, a false signal, if you will. So when we talk about buying the dip on the weekly chart, and if it depends on your time frame and all these things, but if you're trading options under 30 days, like we do here, sometimes I trade 45, but if the options we're going to look at, one trade we look at this week is we traded in 5 days. We sold using this strategy. We sold some bear call spreads on Tuesday, and they're going to expire worthless today. And part of the reason we had sort of the confidence, if you will, to take the trade is because the market rolled over here, and now we're in kind of a bear mode. I actually thought it was interesting, beginning of the week, I thought, man, maybe the market's going to go green here, kind of signal that maybe there is a momentum shift. We're kind of near the recent highs of around 2,800 or so. But man, no, we rolled over hardcore, which was great for our position. And we'll talk about that, what we did on a smaller time frame. But this is a pretty, cool way. If you're looking for a way to just say, hey, what is the bigger market doing? What's the bigger picture looking like? Maybe just throw this up there and go, okay, look, especially in this range, you're trading outside the band. Even if you pull back inside the band, that can be a good buy the dip point in the market. But if you get that close below the bands, that's kind of the warning sign. Like, okay, let me see what happens from here. Obviously, we had some bigger moves here. The rallies were to be sold. This is all hindsight, of course. Rallies were to be sold, and eventually we get the break up, and that signaled several weeks of another sort of buy the dip moment. And now we're getting the sell-off, and as we rallied up in here, we were taking some short positions, selling bear call spreads, and using smaller time frames. So in general, that's something you can use. There's other mechanisms. Some people will just say, hey, if you're above the 200-day moving average, you should be buying the dip. If you're below, you sell the rip. That actually works pretty well too. I personally like the color switching, and I do like there's some other things that the Bollinger Bands can kind of tell us. But just in general, on the weekly chart, I'm looking at these, I think they're momentum bands is what they called. But I really like these, and I'm actually starting to use them on smaller time frames too. So okay, so now let's say okay, we're in sell the rip mode, if you will. Doesn't mean you can't sell credit spreads on extreme moves, and that's something we talked about in a previous video with the credit spread contrarian trade. When that's and actually let's go back, let's head into the daily chart here, and I'm going to take these off and just go to just the Bollinger Bands, and this is a standard Bollinger Band. So now that we know on the weekly chart we're in a sell the rip mode, you can still, from an option perspective, think about extreme moves and smaller candles. When you get these extreme moves, you're still going to get these little snapbacks. So it doesn't mean you can't go long at all, or you can't sell put spreads. I would just caution selling 45-day put spreads, if you will, unless you know how to adjust, because I see a lot of people in my Facebook group and even some of the Patreon members, they want to sell 45-day put spreads because that's what you've learned to do, and it's been working great for a long time. But if you're selling volatility and the volatility comes up, you need to be able to take those profits and wait for the next move. But if you're selling puts up here and this happens to you, then you got to be able to roll or adjust. So if you're going to sell, especially in this market, I think if you're going to sell spreads, 45 days out, you really need to have an adjustment plan in place. And that could just mean rolling down. If you're doing iron condors, you can, if the market goes down, you can roll down the calls and then roll down the puts. But that's something you really need to factor in. The other thing you can do, which I'm kind of in the camp of right now, is just going shorter term for buying the dip or selling the rip, and going shorter term using the daily chart with the idea that the weekly chart we're in sell the rip mode, and I'm using the daily chart and the Bollinger Bands and really just kind of playing the highs and the lows. In general, the Bollinger Bands are cool because you can use each one of the bands, the top, the middle, or the lower one, as sort of a decision point. And obviously, it doesn't always work. We were kind of in this bearish mode. Let me tell you about a trade that didn't go well, so we can be fully transparent here. We all have bad trades. As the market hit the lows, before we started the trade alerts, I had sold some put spreads here, did great. As we started to approach the middle band, I'm looking at the slope here and say, you know what, I'm going to short the middle band. I shorted a little bit above it, but then the Fed came out and reversed course and kind of rallied up, and we had to close that trade. And then all we did was wait for to get to the upper band, and then we looked for a smaller time frame opportunity to sell put spreads, and that's what we did on Tuesday. We sold put spreads this week up here. I think it was at 28.10. Those are going to expire worthless today. Hindsight says, had we bought puts, we would have made more money, but we're not. I didn't know that we were going to come all the way back down. I just knew that we were at the upper band and we got a short signal on the hourly chart, and we'll look at that in a second. So moving forward, what we're kind of just looking at is a range bound market, and the range is varying. Right now, I'm really using the daily chart Bollinger Bands to kind of pick opportunities or levels to trade off of. Right now, we're trading near the lows. And what I told members, I think it was yesterday, was I'm not just going to, in the previous days, and let's scroll over here a little bit. It was pretty easy. If you got near the lower band, you sold put spreads. That's just not what, I don't recommend that. Obviously, it's worked a little bit. It did not work here. Did not work here. You sold put spreads here, you're in trouble. Sold put spreads here, yeah, you get a snapback. But at this point, the slope of the 20 is moving down, so you need to be a little bit careful. It has flattened out a little bit, but you can see that we weren't actually able to retest the real high of 28.15 or whatever it was, and we have that slope starting to move down again. So even though we're near the lower band, I'm very cautious. I also want to see some smaller, maybe some reversal candles. You can see this inverted hammer or doji, whatever you want to call it. These smaller candles right now, these are not small candles. We had a huge, move yesterday, and we had a huge recovery. A lot of people I saw on the feed saying, oh, this is a big bottoming tail and all these things. Well, they weren't right. It just kind of came down. I want to see smaller candles and then reversal patterns, and then look for something on the, I'm using the hourly chart mainly right now for a kind of momentum to whatever direction is you're looking at. So let's do this. Let's drill down to the hourly chart so I can kind of show you what that looks like. And I'm going to put the momentum band back on. Here we go. And here was basically the trade we took. So the market had rallied up. I'm going to put this up here so you can kind of see it. Let's go back to the daily so you can see it better. So the market had rallied up. We were near the upper band at the time. And you can actually see we got a short-term buy signal on the daily chart. But remember, the weekly chart is still negative here. So this is a skeptical buy. Even though it did move up, I did not want to, I'd prefer to take trades to the short side because we're at the higher end of the range. Because remember, the Bollinger Bands are up here around 2,800. So as we got to this near the upper band and we kind of put this candle in, I wanted to wait because I was really looking for the momentum to shift, because what I didn't want to happen is some kind of bull flag and we move higher, because on the weekly chart, as we saw before, we thought that there was a potential that the weekly chart was going to close above that band as well, but it didn't ultimately. But if we go back to the hourly chart, so what we did the very next day, this was the one day, the hourly chart sort of fired short. So we got a short signal on the hourly chart with the momentum bands kind of turning red, closing below the lower band. So at that point, during this time, this is around 10 or 11 in the morning, that's when we decided to sell an out of the money bear call spread. We actually sold it above it near the upper band. And then literally that next day, it just fell off a cliff. Like I said, hindsight, I could have bought puts and made more money, but hindsight's exactly what that is, hindsight. So at this point, we're actually getting a short signal, another one today. I'm skeptical to take this short signal. Why is that? Because on the daily chart, we're near the lows of the range. So I don't know that I want to get short near the lows, even though we're in a bearish weekly chart kind of momentum. I don't know that, that I want to short the low. So at this point, I'm just going to wait until next week. And if we start to chop around at these levels, okay, there you go. Sorry about that. We'll see what happens next week. Today's Friday. I'm doing this video a little bit early in the day, so the market's still moving here, but it's not looking good. And when we look at just the Bollinger Bands in general, we're near the lows. The lower band is starting to move lower, and the upper, they're all starting to tick down a little bit, similar to what it did here. But I think we could still be in a range here. I wouldn't mind, or I wouldn't be surprised if I saw a flush down to 2,600, because there's you think about the lowest support here is 2,603. There's a lot of dip buyers going to be in here because they're going to play the range. And I think to really flush out the weak hands, if you will, you would need to move below there. So I'm going to be watching this lower band for long entries. Now, if we rally back up to the middle band next week, then we can determine, okay, should we short the middle band? What's the rest of the market doing? That kind of thing. Okay, one more thing before we go, and I just want to point this out because this is something that, these are some of the little nuances here, and using Bollinger Bands. And I'm going to look at the weekly chart. And a lot of times, once we get into a certain mode, if you will, we're kind of in a little bear mode right now. We'll see how long it lasts. But I wanted to point out a couple things. So first thing, just for Bollinger Bands in general, when the volatility is increasing, a lot of times you get both bands moving away from each other. And we're starting to see that here. What's really got me concerned about this market from just a bigger picture time frame is this turn down in the lower band, as well as the moving average. The upper band isn't too, it's moving higher, but I wouldn't call it a giant expansion. But it's still nonetheless not going down. And typically, if it's not going down, then the volatility is kind of for real. The fact that we've been 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks or so below this with a lower moving band just tells me that I think we're going to get one more flush. It could be, it could be much larger than that. I just feel like it's not over. And if we zoom out a little bit, I just want to kind of look at some of the other times that happened. You had a big move up here and a huge reversal. You barely even got to the lower band, so much that during this dip, if you will, the lower band was moving up the entire time. If we go back here again, the upper band's moving up. In this part, the lower band was moving lower, and this kind of got a little scary. This was in 2016, but 1, 2, 3, 4, 5, 6, 7, 8, 9. And so I guess, technically you're still under 9 weeks, but to me, this sort of reversed a lot cleaner. So to me, I don't want to go back through the whole chart, for 20 years or whatever, but the fact that we continually are banging on the lows here kind of tells me that the dip buyers aren't there. And I don't know if that's because the Fed isn't printing money anymore or they're potentially raising rates. Like literally when I was making this video, I just saw a headline that one of the Fed guys thinks they should hold off on the December rate hike. Maybe that helps out. You got the Chinese tariff deal that got postponed in the next year. Even if we just take a look at the Russell's much, much worse looking. And we're actually starting to take out the lows of February. The SPY is kind of hanging in there. The lows of February, we're still above those. But the nature of these of what I'm seeing here is just telling me that there could be some lower prices. So the way I sort of interpret that is say, okay, let's really wait till we're down here. And I want to wait for the confirmation of some kind of long signal, which is why I would drill down to the hourly chart to see if we got that momentum band. And this is the Bollinger Band, but if we got that momentum buy signal like we here we got the sell signal. So I know that's a lot in the video. We covered a lot of things, but I just wanted to talk a little bit about buy the dip, sell the rip. I'm going to be doing some more training on these different bands and different time frames, and I am tracking the market throughout the week over on Patreon. So be sure to check out the Patreon page if you want to, trade along with me here and get, let me know, or I'll let you know when we get into some new trades. We're doing a few trades per month here for SPX. So that's all I got for this video. I'd love to hear what you think about the market and what tools you're using to track this market, maybe what strategies or maybe even some stocks. If you guys can put that in the comment section, that'd be awesome. You guys have a great weekend, and we'll see you at the next video.